Thank you very much, Rachel, and good afternoon, everybody. My name's Rowan Austin from NatWest. I'm going to deliver 7 tips in 7 minutes on international trade and working capital. It's going to be short and sharp. Tip number 1 is capitalise on export markets and global growth. We heard today from Martin Wolf about the state of the UK economy. We heard the headwinds, which include tightening monetary policy, low productivity, geopolitical instability, and of course Brexit. But we also heard about the following wins, such as low unemployment, possible fiscal easing, and still record low interest rates. But most importantly, we're seeing a strong global recovery of our key export markets, including particularly the US and Europe. And this, along with the devaluation of sterling since the Brexit vote, has led to a boom for UK exports. Export orders are at the highest level for 30 years. Brand UK is admired across the world, and some suggest that global growth can offset any of the short-term negatives of Brexit for the UK economy. So it's time to capitalise. Businesses should think about creating beachheads in new markets, and it's really important to have clear export strategies to target these markets. Number 2 is line up your stakeholders early. It's important for companies to work with key stakeholders, 3 of which who will help to attack export markets. Number 1, the banks. We're here to provide funding and risk management tools to facilitate trade and also to support investment in domestic infrastructure. Number 2, UK Export Finance. A shout out to them, they're here today. UKEF's mission is that no viable British export should fail for the want of finance. They work closely with the banks on marginal cases that the banks can't finance and are becoming more and more ambitious and innovative in supporting UK exports. And number 3, the Department for International Trade. DFIT have experts based in embassies across the world. This is a fantastic network that gives practical support and advice for exporters. It includes language, cultural assistance and local practices, and these 3 are working closer than ever before, so make use of them, and the key is to engage them as early as you can to support you from the very beginning of the deal. Number 3 is pick your partners carefully. Businesses have rigorous processes to select those who supply equipment, raw materials, services and the like. But in the same way, companies should choose their financial partners very carefully. For example, with banks, most people have a longer relationship with their bank than they do with their spouse, and that's sad but true. But the world of banking has changed dramatically since the financial crisis. While the world has globalised, lots of banks have gone the other way and de-globalised, and many banks now focus solely on their domestic markets. So to support you in global growth, it's critical to find the right banking partner, one with knowledge, sector expertise and cross-border product capability. So be demanding of your banks and change banks if you're not getting what you need. Number 4 is stay sharp on financial risk management. The world might seem like a relatively benign place at the moment, but now is the time to prepare for financial risk. And I'm going to cover 3 areas. Firstly, interest rates. The Bank of England has already signalled that rates are going to rise, so lower for longer will not mean lower forever, and borrowing costs will rise. Secondly, currency risk. Sterling devaluation has helped exporters, but where does it go next? Some say sterling will bounce back as the Brexit agreement becomes closer and clearer, but on the other side, the IMF has recently warned that sterling could lose 15% if Brexit is disorderly. So which way will it go? Having a strategy to manage currency risk in a volatile environment is critical. And number 3, counterparty risk. Supply chains have become increasingly globalised. Trading with a counterparty in Boston, Lincolnshire is very different to trading with a counterparty in Boston, Massachusetts. So managing the financial risk of trading with overseas counterparties is critical. Number 5 is keep your eye on the working capital ball. In the UK, it's estimated that £150 billion is locked up in excess working capital, and across Europe, this is up to €1 trillion. Poor working capital can mean needing to sacrifice investment to maintain cash flow, or to flip that around, tied up working capital is a resource that can be used to fund growth. Now, it's easy to take your eye off the working capital ball when interest rates are low. It means that getting finance is easy and cheap, and appetite to improve working capital through operational levers reduces. But rates are rising from historical lows, and optimising working capital management is essential for companies to gain competitive advantage. And it means that getting into the right habits and practices now is crucial, and developing a cash culture and improved discipline around working capital management should be a priority now. Number 6, embrace technology. Whether it's the products you sell or how you run your business, technology is changing our world and faster than we can imagine. Whether it's AI, nanotech, blockchain, VR, robotics, they're all in vogue, but which are fads and which are going to be on an exponential growth path? And that's difficult to predict, but that in itself is not a new problem. In 1955, the owner of a vacuum cleaner company predicted that by 1965, we'd all be using nuclear-powered vacuum cleaners. Now, obviously that hasn't happened, but business models are changing incredibly fast, a disruption. Uber is the world's biggest taxi firm with no taxis. Airbnb is the world's largest provider of rooms with no hotels. And we're also seeing in banking where fintech is changing how we operate and how we think. So embrace technology and the growth mindset. Make it work for you professionally and personally. Prototype, experiment, test stuff, play around and be prepared to fail. But please experiment carefully if you're looking to get into nuclear-powered vacuum cleaners. And number 7 is cybersecurity. Technology brings great opportunities, but it also brings threats. Cybersecurity is a growing risk to us as individuals and also as companies. Europol estimates that more money is made from cybercrime than from the entire international drugs trade. And hacking is a key risk that affects brands, customers and businesses. And the results? Last year we saw WannaCry cripple the NHS. We saw NotPetya spread to 100 countries in just a couple of days. It's some of the biggest corporates, and just 3 of them, Maersk, Reckitt Benckiser and FedEx, estimated that the cost to them of that outbreak was $750 million just for those 3 companies. So in a world where we're becoming ever more connected, the need for vigilance in cybersecurity is critical. So those are my 7 tips in 7 minutes. Thank you for listening, and please come and see us on the Lombard stand. Thank you.